Well, good morning and welcome to the trade setup right here on BloombergQuint. It's Friday and it promises to be a day wherein we'll have which will be more volatile than the last few simply because the trend is lower, but we may start off higher. However, we'll get to that in a bit. First, the news flow, which is right now dominant over and above the coronavirus cases spiking and the fact that we now have over 3 lakh deaths around the world, the US-China trade tensions are rising. Now, there's an interview that Donald Trump did with Fox, and some excerpts out of that have been filed on Bloomberg.com and BloombergQuint.com. But I've chosen the 2 or 3 most important things, and I'm bringing that out for you. Donald Trump has said that while things are going on the way they are, does he want to have a conversation with Xi Jinping? No, not so much. He doesn't want to talk to him, and he's mused about severing the trade ties with China as well. It was an offbeat comment that he gave, but he did say that, oh, what if the trade ties are cut off? What will happen? Nothing much is what probably he was indicating in that interaction. But there was some musings there too. And he says that, of course, a lot of these might not even go through, but he said that he's examining, or that the US may examine Chinese companies trading on the US stock exchanges, but not following US accounting as well. So essentially, the exchange of words is now pretty severe between US and China. The world markets would have done without a trade war in a scenario like this. I think that is now firmly on the table, and that may keep the markets nervous. However, in yesterday's session, the markets were anything but nervous. The US markets showed a very sharp intraday recovery. They were headed lower for the 4th straight day when the markets opened, but then an intraday bounce back really helped, and the US helped sentiment, and the US markets did surge in trade yesterday. So that was part one. I think Asia is starting off on a mixed bag, but marginally in the green. The SGX Nifty 2 indicating a start which is marginally in the green. The good part is that the US futures too are showing an uptick as of now. So the going as the end of the week from a trade perspective is probably bent towards a bit of a bounce from the lower levels for the world market. So you have to bear that in the mind. I think these days people are playing for a day or a couple of days and not necessarily a really large trending position from a trade perspective. Now, the other thing is crude and how sharply it rose yesterday because of the dip in the US stockpiles as well as the IEA data. Now, this morning might be a bit meandering and marginally flattish, but essentially, crude did go up in trade yesterday, and therefore watch out for the oil sensitives. They might all be in focus in the session today, especially the upstream names. Hell, even Reliance might get a bit of a support from that. But the trade setup, I would believe the market remains in a bit of a no trade zone really today, simply because there are 2 or 3 things, there are 2 or 3 reasons why I say this, viewers. We are on a downward trajectory that we all know. There's a bit of a bounce that we might see today, which is entirely possible. And the lower trend is very likely to stay unless the world market stage a bit of a recovery. But the most important thing is that while we are on a downward trajectory, any market pleasing announcement that might come in between today, Saturday, and Sunday from the finance minister might actually set a stage for a bounce too. So you might well be wanting to sell on highs, and you might well do that, and you might well make money towards the close of day today. But I would reckon that carrying home short positions or long positions for that matter, large ones, might not be a great idea, simply because we might have any announcement coming in from the finance ministry which might turn the market mood for a short-term period. So keep that at the back of your mind if you're trading it. I'm not saying that will certainly happen, but it's an important consideration from a trade perspective. FIs continue to sell, however, and about 2,152 crores sold in Thursday's session as well. However, the stocks to watch, and there are a couple of very interesting ones that I would want to focus on for a bit. Firstly, I believe Reliance, Bharti, and Vodafone, and Reliance has shaved off about 10% from the peak. Bharti Airtel 2 has come off. Yesterday there was a CLSA upgrade on Bharti. Today there is a City note on Bharti, which is bullish. The stock has come off from those levels of 560, 565. Reliance has come off 10%. I think they're seeing a bit of profit booking. Don't know if this will continue, so be mindful of that. There could be some bottom buying that we might see in some of the telcos, so do watch out for those names. Manappuram Finance was an interesting quarter. NI's revenues up, net profit up 43%, and these are companies which are seeing increased demand because a lot of expectations are that people in emerging countries, Thailand has already shown exhibition of that, people in India might just come out and put their gold holdings on loan to get the much needed cash currently, and that's great business for Manappuram and Muthoot. So do watch out for Manappuram Finance. Good quarter. Let's see how it lasts. I think the stock to monitor today could well be Escorts and maybe the entire tractor space. So the con call highlights of Escort suggest that they believe that 60% of the lost demand in March and April will get fulfilled in the month of May. 95% of the refinancing happening through private banks and NBFCs, and therefore Escorts does not see any financing issue. The problem, as they see, is more of the supply side because vendors are still in the red zone, but demand is not a problem. And how many industries can you talk of which are saying so confidently that demand is not a problem? Extremely bullish statements, numbers not bad, might be an interesting stock today. Tata Consumer might be the other interesting stock today. Tea business grew 6% versus expectations of 0 to 3%. Coffee business above estimates. Consumer business above estimates. And the company in the con call said that the company is working to improve return ratios, a mix of higher sales and cost control measures. So bullish commentary there as well. And therefore, Tata Consumer is the other one that you need to monitor today. I think the two stocks that frankly would be in focus would be Tata Consumer as well as Escorts in the tractor space because of the confidence that Escorts exhibited in the con call. Remember, we'll be talking to the management at 10:15 a.m. today, so you might want to tune in to hear out what Escorts is saying firsthand for yourself if you need want to take an investment decision in Escorts. Last but not the least, Zensar Tech, mid-cap IT, when they surprise, the stocks are really bouncing well. We've seen that with Persistent, we've seen that with Emphasis, and now Zensar Tech, while the revenues were flat, the EBITDA performance was very strong, led by lower other expenses and lower subcontracting costs. The deal wins were strong, net profit higher by 2 times, net profit doubled in Q4. The numbers are looking very promising. Let's see if the stock also reacts accordingly in the session today. But these are a few names that you certainly need to keep an eye out for. Watch out for the overhang on the US trade tensions, US-China trade tensions, and be careful if you're carrying home your short positions or your long positions for that matter, but shorts more importantly because the trend is lower. But if there are announcements over the weekend from the finance ministry, then that could change the trajectory in the very near term for the equity market. So you got to be mindful of that when you're trading today. Thanks so much for tuning in.